We'll go. Good evening, everybody, all the members, non-members, for this interesting seminar on IFRS 17. We always try to ensure that we bring up the topics which are relevant to the members and in the industry, which are the important topics. So this is last year we had a couple of topics on the basics of IFRS 17, and now it's the time to look at the practical challenges which are being faced by the industry or by the regulators or by the actuaries to work collectively and ensure that this standard is implemented from 1st January 2023. So I welcome you all again. Before we begin, we would like to thank His Majesty Sultan Haitham bin Tariq, our sponsor CBFS, and our corporate supporters as well as our corporate members. I request all to please stand for the ICAI motto song.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 Purusho nirmimanaha Tadeva shukram Tada Brahma Tadevamritamuchyate Tasmin lokaha Shataha Sarve tadunatyati kaschan Etadvaita
Thank you, Rudy. Please be seated. Now I request our beloved chairman, CS Ajib, to please address the gathering.
Thank you, Unmesh. Good evening, everyone. After a couple of physical events in a series, including Onam celebration, we are coming back, or we are conducting a virtual event, remembering reminding our pandemic days. It's after some time we are having a virtual connect on IFRS 17 practical challenges and implementation. Though in the title there is a challenges, I hope this session will have some support or solution or help to remove the challenges. I thank CA Ashwini ji, CA Kashif ji, and Priyank Gupta, and our moderator CA Shanawaz Khan. All the very best for the session. Before I conclude, a couple of points to note down. One is the World Congress of Accountants, as we know, November 18 and 18 to 21st in Mumbai. World Congress of Accountants is happening. We have given support from our chapter side to motivate and to have maximum participation from Oman. We have created a group as well, which we have circulated in the chapter group to express your interest to join physically join for CA conference, World Congress of Accountants in Mumbai. We are exploring all the support from our side, which is logistic, including the logistic support, like collectively coordinating, like tickets or hotels or whatever. Other than that, as you are aware, 21st of October 21st, we are having our Diwali celebration. The event venue also has been identified, which is Al Baja Hall, and I hope the intimation has come to the members. please attend in large numbers and make it as a grand success, same like Onam, which we celebrated last month. Our annual mega event, international seminar, which is happening on 9th and 10th of December, which is happening in Crown Plaza. The managing committee is having the preparation is going on, and we are making our all efforts to make it as a grand success. The international speakers lined up, including the officials from Delhi. I hope this would be a great event with the great success, with the support of each one of you. With this, I wish all the panelists and moderator all the best to have a great successful event today. Thank you so much. Over to Unmesh.
Thank you, Sajeev ji. When we were discussing about designing this event, we wanted to have participation from all the stakeholders. So we tried to balance out our panelists, and also we have got a dynamic moderator. We have from actuarial side, Priyank sharing his views and contribution. We have from the regulator side, Kashif bhai, and from the industry, we have got Ashwini, who all will share their views, the challenges, the roadmap, what they have done so far, what are the challenges in place, and how they plan to overcome that. And probably we might be left with some unanswered questions or things to take away and action in coming quarter. This is the last quarter to complete all those action points. So with this, I would like to call upon CA to introduce our first panelist, actually Priyank Gupta. Jay, over to you.
You are on a mute, Jay.
Good evening all. Good evening all members. Priyank is a qualified actuary from the Institute and Faculty of Actuaries UK and Institute of Actuaries of India. He acts as appointed actuary to several insurance companies in the GCC. He has been actively involved in IFRS 17 implementation and has extensive experience in the Middle East and in the Indian insurance market, where he has been working in statutory as well as consulting capacities. Let's welcome actuary Priyank Gupta for sharing his insights. Over to you, Priyank.
Welcome, Priyank.
Thank you.
Now I request CA Bala to please introduce Kashif Siddiqui.
Good evening, everyone. It's an honor for me to introduce a great personality with us, Mr. Muhammad Kashif Siddiqui. He is representing CMA today at the panel. He is a fellow chartered accountant, a public finance accounting, PCD. He is in Islamic banking, the Kafol and certified Sharia compliant auditor. So he has a lot of qualifications I can read out, and it will continue for at least 15-20 minutes just explaining his qualifications. He has great and vast experience into advisory, auditing, accounting, and he has global exposure of international industries, insurance, and various financial sectors. He is currently associated with CMA, and CMA is known to all of us. It doesn't need an introduction, so you can understand what a great experienced person he is. With this, I would welcome Mr. Muhammad Kashif Siddiqui on the panel. Over to you, Unmesh.
Thank you, CA Bala. Welcome, Kashif Siddiqui, for this event. Now I request CA Shilpa to introduce our past chairman, CA Ashwini.
Thank you, Unmesh. It's my proud privilege to introduce our panelist, who is included amongst India's top 100 women in finance, CA Ashwini Savarikar. Well, she truly needs no introduction to our chapter members as she's one of our most active past chairpersons. She's an audit and risk professional with over 25 years of work experience. She's currently working as the Chief Audit and Risk Officer with Arabia Falcon Insurance Company. Apart from her CA qualification, she too holds a long list of professional qualifications, including the CISA, the CIA, CFA, and also a certification in operational risk management. Over the years, she has served on boards of several professional organizations, including the ISACA and the IIA. She's currently serving as the finance director on the board of Indian schools in Oman. She's a globetrotter and has a melodious voice, which has earned her the title of the Nightingale of our chapter. We are elated to have you join us today as our esteemed panelist and look forward to your valuable insights in today's topic. Welcome, C. Ashwini.
Thank you, Shilpa.
Over
You
to
said
you,
things which
Jay.
were not mentioned in my profile.
Welcome, C. Ashwini. Thank you, C. Shilpa. Now I request C. Digan to welcome our moderator for the event, C. Shahnawaz Khan.
Thank you, Ulmesh bhai. Thank you so much. Good evening, everyone. On behalf of ICAI Muscat chapter, I would like to introduce our today's moderator, CA Saj, who is also known to most of us. CA Saj is a CEO of Baker Tilly and regional IFRS leader. He is a commerce graduate and a qualified chartered accountant from ICAI as well as ICAEW. CA Saj has worked with Big Four audit firms in UK, Europe, Africa, and Middle East. His last role was the leader of the FAS practice with Grant Thornton, where he led several IFRS 9 and 17 implementations for life and general insurers. CA Shaz has conducted many workshops, sessions, and webinars on IFRS, and in particular for IFRS 9 and 17, and also written a number of articles and trade alerts for emerging risks and best practices in leading newspapers. He shares his experience regularly with CA fraternity professionals and worked as members of groups such as the big audit firms group in the UK and regulatory bodies such as accounting and auditing organizations for Islamic financial institutions to enhance and upgrade accounting standards and best practices. CA Shaz has been a recipient of various accolades and awards across the globe due to his efforts in serving the business community and mankind, and was recently conferred PhD by Kyo Fanny University, Hathi. He has also served as an office bearer for professional associations such as ICAI Muscat chapter and currently serves as brand ambassador of ICAEW in the region. With this small introduction, I would like to welcome on behalf of ICAI Muscat chapter CSRs to this event and wish you all the best. CSR, over to you.
Thank you very much. And Digan bhai, you forgot one thing, I suppose, that I happen to be a poet also, and I sing sometime as well.
Oh,
so
okay.
This adds to a little bit of variety, because people nowadays, look after the variety more than, I suppose, the monotonous CVs. Thank you very much.
Thank you, C. Digan. Thank you, C. Shaz. So now this stage is set for the event to start. I would like to request all the participants to please type in their questions. Try to make it very crisp and to the point so that it's easy for the moderator to pick up the questions and post it to the panelists. So with this, I hand over the stage to CA Shaz. Shaz, please proceed.
Thank you very much, Unmesh bhai. Our dynamic chairperson, my dear friend Sajib, is smiling, and he said that the session was most likely to bring, I suppose, the solutions than the problem. So Sajib bhai, forgive me. It might not be the right start. In the end, we may create a little bit of, I suppose, more awareness. But solution-wise, we may need, I suppose, more sessions as well. But that's the right spirit to start with. Thank you very much, Unmesh, for taking the lead. I understand this is a very difficult topic, and finding these, beautiful people, I suppose, on the panel itself is a big challenge. And it seems everybody's excited. So Kashif bhai, where are you? I can't see you. Ashwini, are you excited as well? And Priyank, are you very much excited? So first and first, more the way, I suppose, I thought the session has to be designed in a way that we take the best out of these three individuals. So I would probably start, with Kashif bhai. And what I like, his perspective about the IFRS 17 journey so far, as a regulator, as an accountant, what I suppose, as a standard setter as well. He's been helping with me on the IFRS 17 balance standard for Takaful as well. We are on the same board. So I'd like to hear and share your experience, Kashif bhai, for the larger part of the audience is how has been the journey of the IFRS 17 so far in your individual capacity, please.
Thank you, Mr. Shanawaz, and thank you for my introduction in very nice words, actually, first of all. And I'm very much thankful to the Muscat chapter of Institute of Chartered Accountants of India for inviting me to this August forum and representing the Capital Market Authority as a regular authority of the insurance and capital market sector in the Sultanate. So what I believe that IFRS 17 is not only a financial reporting standard, actually, it is more than that, actually. Because IFRS 17 represents the most significant change to the insurance accounting requirement in over 20 years, it demands a complete overhaul of the insurance financial statements. And to implement this complex standard, what we have seen that it not only requires the accountants to play a role, but also actuaries with their significant involvement, actually. Because generally the accountants' involvement is significantly on its core functions like financial reporting, disclosures, analysis, and devising the calculating engines, accounting policies, allocation, chart of accounts, and ledgers, and integration with the processes. But this time we feel that the actuaries are a lot more required to be collaborated with the accountants to reach to the desired result, actually. They must be involved in the planning phase, budgeting phase, forecasting, especially their own core area for the future forecasting of the future cash flows, estimating the recoveries from the reinsurance side, and providing adjustments to the time value of money, and providing the risk adjustments to the for non-financial risk, and making assumptions, decisions, actual methodologies, and even the pricing of the product may also be get impacted through this IFRS 17. So their involvement also be needed in that area. And for the purpose of the level of aggregation, I think the alone accountant cannot do this thing. I think we need actual support also. So I think this time with the IFRS 17, it requires a lot of involvement of the actuaries along with the accountant. However, it is an accounting standard. And we believe that not only the accountant and auditor, I think we have to work in collaboration with the operational and other functional department as well within the company. And what we have seen that this standard actually is requiring deep engagement of the different segment of insurance business on a regular basis, and so that it will bring the clarity and transparency in the financial reporting. And the level of the clarity in terms of the granular data and processes, it is believed that it will be initiating and supporting the transformational change across the insurance business. So as a change, rather than it can be said as a big change, actually, because it is required at every level of the insurance business operation, not limited to the accounting function. For example, it also needs change in the IT system, data structure, and product designing, pricing, even the development of the human resources, training, even compliances, KPIs, performance measures. I think this is an overhaul for the whole insurance sector. I think this is not only an accounting standard. I believe so, and you must also endorse this. And to fully implement the standard, I think there will be a more reliance on the IT systems. So therefore, there is a dire need to develop the comprehensive digital strategy so that it can deliver the data efficiently and effectively also from the reliable sources. So I think intentionally, the standard is designed to require comprehensive data and analysis that supports sustainable and transparent assumption and decisions. And it's also tempting to view the standard as a tool for the regulator that may assist them in the measuring the financial soundness of the insurer and in a reliable manner. And also not only this, to measure the financial performance accurately in terms of core insurance business, segregating from the other business of the company. So I personally think that it requires a transformational journey for the insurance as well, and for the regulator also, and for the auditors as well. Because there are so many challenges to be faced by the regulator and auditors also, along with the insurance industry. And whereas the investor and the other key stakeholders also need to learn the future financial impacts. It may lead to more capital requirement. It may lead to change some investment policies, or to have some investments in the systems, and it may need more human capital by hiring or trainings. So I think there are a lot of requirements there in the IFRS 17. So it's not only a change; it's a big change, and it will lead to a big impact as well, because everything is interconnected. So this is my understanding up to now for the IFRS 17 from the regular point of view, from the industry point of view, from the impact point of view.
Thank
you. Over to Mr.
Thank you very much. And I suppose that's so it set the tone of the session. And those who do not know the technical terms, I suppose I would probably ease down those terms as well. Some of the key messages, the IFRS 17 is, of course, is the transformation journey, not only for the regulator, for the insurance industry, professional auditors. There's a fair amount of data required, there's a fair amount of, transmission effort required, systems, ITs. And, he mentioned so many times about the operations level of aggregations. So these are technical terminology. Perhaps, it's safe to say that we are actually moving, from the bull car to the Cadillac, as far as the insurance accounting is concerned as well. On the same thought process, because he discussed something about the actuary as well. And we have a very beautiful smiling actuary, not smiling as much, but he should start smiling now. So the actuary is up there, in the panel as well. Priyank, my question to you, on the same thought process, what has actually fundamentally changed when compared to IFRS 4 and 17, the role of the actuaries, and how you see the transformation of, the IFRS 17 with the help of the actuaries so far, and where I suppose the future lies.
Right. So thank you, Shanavas, and thanks to ICAI Muscat chapter for having me as a panelist. So like Mr. Kashif already alluded to, I mean, the role of actuaries have changed a lot, and the requirement for actuaries to, contribute to IFRS 17 journey has been significant. I mean, even though the IFRS 17 is meant to be an accounting standard, but the involvement of actuaries have been significant. From what we have seen so far in most of the companies, the implementation is led by the actuaries. Like I said, though it's an accounting standard, but still actuaries are on the forefront of this. And then traditionally under IFRS 4, which is the current accounting standard or the interim standard, the actuaries were involved mainly, in estimating the technical provisions, which was eventually booked in the financial statements. But going forward, the involvement is much more. The whole standard is based on the cash flows and projections, where actuarial input is required. And even for actuaries, people, particularly people like me who are working in general insurance or non-life insurance, this is a new area. The cash flows, the projections, and all those sort of things is relatively new. So various assumptions, a lot of these are already spoken to by Mr. Kashif, but like risk adjustment, discounting, I won't go too much into the technical terms at this stage, but these are going to be provided by the actuaries. So accountants and actuaries have to work hand in hand in this area. And many simplifications that were being used in the Omani market, historically, like, IBNR as a percentage of outstanding or UPR using simplified methods, that will not be, allowed for going forward. So the calculations are also very onerous under IFRS 17. And because this is a forum of chartered accountants where a lot of people practice on the audit side, the role of actuarial experts within audit will also increase, because now it's not just about reviewing the technical provisions, but also providing their inputs on several other areas of the standard.
Thank you very much, Priyank. Thank you very much. I'll come back to you on those thought processes as well. And now I guess the Nightingale is there, so this is the name we call her. And I often call her actually Nightingale. So this is the way, we address. So Ashwini, I guess you happen to be right in between on my screen as well. I don't know, this is how you are, seeing yourself on your screen. So you are in between the actuary and you are in between, the regulator. And I suppose this is the right place, if I may say so. Any insurance, accounting, or I suppose the auditor, they're pretty much, I suppose, following in between, a sandwich, among the actuary and, the regulator as well. How is the journey so far, for you? And where you believe, and I like to use a word, which is used by Priyank, which is said the hand in hand. So earlier the actuaries used to rule it, but now I suppose it's a hand in hand. So at least we started getting some respect from the actuary. How's your experience so far, and where do you feel, IFRS 17 transformation journey is taking the industry?
Right. Thank you, Shaz. Good evening to all of you, and thank you to Muscat chapter. Speaking again on the dais of this chapter brings back fond memories. And auditors are used to giving disclaimers. So let me begin with a disclaimer that whatever I'm saying are my thoughts and not necessarily my company's thoughts. So yes, Shah, as you said, viewpoint on the industry and what IFRS 17 is doing to us. Let me step back a moment and bring your attention to any industry for that matter and how they view the accounting standards, the names, their impact. So for the core business team, this is something which the accountants are supposed to manage. Right, accounting standards, the business is really not concerned about that. The business team does business, and accountants are supposed to do the aftermath and do the accounting as per the standards. But this IFRS 17 has changed everything. The insurance industry was no different before. Now it has changed things for us. Earlier, the technical team, and when I say technical team, it's the underwriters and the claims management teams. They were never bothered about accounting standards and how the accounting happens for the business that they do. Whether it's management or board, they are primarily doing the insurance business. But now the dynamics have changed. I still remember when we first began the IFRS 17 journey, that was a time when these discussion topics came up. I've heard the non-accounting, let me say non-accounting people, they have said, what was that IFSR thing that you mentioned? So that's how it started. And that's how everybody came on board. And now it's been a journey last 2, 3, 4 years for different companies, multiple sessions, awareness. People understand that here is an accounting standard which is going to change the way the business has to be conducted. If you ask me the overall impact, I would say now the technical teams, the accounts teams, the risk teams, actuarial teams, they are all working together. There's a convergence and collaborative efforts are being made by these teams to see how pricing of policies need to be addressed, keeping in mind maybe the possible onerosity and the other cash flow aspects and other aspects under the IFRS 17. So this awareness aspect is what we're seeing. Even the sales teams, for example, who were never bothered, always worried about the top line for business, are now looking at the recovery of premiums and how it's going to affect the bottom line, because the accounting has under IFRS 17, the way things will be accounted will be totally different from what it was in IFRS 4 before. So I believe it is a big change, but it is going to be beneficial to the industry in the long run.
Thank you very much. And, with those thoughts, I will come back because I like to know, is that how the stakeholders, they should, I suppose, keep themselves aware. So these are going to be my question. Later on in the session, we'll touch base. On the same thought process, I'd like to continue and, go back to Mr. Kashif as well. Kashif, I just need, I suppose, one or two just pointer, what has fundamentally changed in IFRS 17. We talked about variety of things, the risk adjustments and discount rates and others. I would probably need, I suppose, 1 or 2 points from your side that, these are the 2 fundamental changes you believe. And the quick comment on how far, I suppose, the regulator has been behaving, who is ahead among, the rest of us. So just, I suppose, your quick comment on these 2 thoughts.
Yeah. Thank you, Shanawaz. Actually, this is very difficult to identify only 1 or 2 areas. Whenever you find out some area, it is more difficult. If you go to another area, it is more difficult. It is very difficult to say these 2 areas are most difficult and rest are very simple. No, that is all together in every area. For example, the altogether financial statement, the structure is changed. Not only the structure, the calculation behind all these numbers are changed. Even the profit computation is changed. Technical reserving criteria is changed. See, everything is changed. Even previously, we have been seeing the net profit, or net claims, net premium. Everything is now missed. So it's very difficult to say which is most important. I think the most important change actually is the data requirements. I think the data requirement is the most critical part. If we are able to get the correct and reliable and the required data, then we can compute things easily. Formula is not a difficult thing, but the required data to compute something is very difficult, because we have been using the system for years and years and decades, and we have been using the same data sets, but the requirement of the IFRS 17 has totally changed. Now it requires a totally new set of data. And probably in terms of the actuarial valuation, for example, the actuaries have been providing the reserving numbers to the industry, and they are just incorporating in the financial statement. But now what? These numbers are not with the actuaries now. These are all calculations, and the data company must be having with them. They have to compute everything. I think this is a major change. All the actuarial functions which the actuary actually uses by their own, using the software or model, whatever, it has to be within the company now. So it's a big major change, I feel. And the data sets, your systems, your fields, your all should be integrated. It should be available. So data set is more important. And if you talk about the pace with the regulator, actually, see what has been done. Regulator, actually, Oman was the first country in the GCC who initiated the implementation of the IFRS 17. And later on, the COVID started, and then we deferred based on the request in the market, and it delayed a little bit. But we have seen the Saudi Arabia and UAE, they are actually heading quite good with a good pace. And but we can see the Bahrain has started very lately, but now they are picking up the pace. But as per the money market, there are some issues in the market. We have to deal with the condition of the market. For example, in Oman, okay, 55% is the local companies and 45% is the foreign companies. And in the local companies, actually, most of the local companies, we have seen that they have appointed a consultant to deal with all the issues for the IFRS 17, even for the gap analysis, for designing policies, or for anything. So, and they are also depending for the procurement of the IT system based on depending on the consultants, actually. So mostly the local market, local companies are depending on the consultants' work. And remaining is the foreign company, which are 40% of the share, which is quite good. And they're depending on their head offices. And we feel that the head office which belong to their jurisdiction, their regulators are pushing them very hard. So we feel actually the Omani market is little bit in a way that they can achieve the target, but still something are left. For example, the company is not in a position to, companies in the market is not in a position to test the data because they have not acquired the system, they have not modified the 100% system, they have not purchased the tools and IFRS 17 engines 100%, they have not put the data, they did not run the, they don't conduct the dry runs, they don't have results. So maybe at the end, once they do the dry run, there will be surprises for the industry. So the pace is different with the decision to decision based on their own market. And what I hope that Omani market will inshallah succeed and achieve the target. Maybe because at least by the reporting time, not necessarily by 1st January 100%, but when the time is come to report, I think they will be ready altogether. This is my assessment based on the status updates from the insurance companies.
Thank you very much. A couple of points are keep on coming again and again. And I like to move to Priyank, who has started smiling a little bit more, I suppose, as the session progresses. I suppose the smile, would come more often. Priyank, on the same thought process, we understand, there are a lot of things which is coming across for the reader. What I needed, I suppose, the most important thing is the recognition of measurement. And if I say so, the measurement itself. Can you just share some light, with your experience? What has fundamentally changed in terms of how the insurance contracts are measured within the IFRS 17? I suppose that would help a lot, to the reader and the participant for this session. Thanks.
Right. So yeah, the measurement of insurance contracts, like you mentioned, it has significantly changed under IFRS 17 when we compare it against IFRS 4. So the underlying or the default measurement model that is prescribed by the standard is the general measurement model, also called the building block approach. And the name building block from that there are various blocks on which basis you estimate the liabilities for the insurance companies. So if you try to kind of compare it against IFRS 4, the liabilities that actually is used to estimate are based on two categories. One is the expired risk and one is the unexpired risk. And more commonly used called the reserve risk and the premium risk. So basically under IFRS 17, we term it as liability for incurred claims and liability for remaining coverage. So I'll talk about these two separately. So liability for incurred claims is very similar to what we currently have, which is the outstanding claims, IBNR, unallocated loss adjustment expenses. The only difference under IFRS 17 is that you need to estimate these and then you need to project them into cash flows. That is called the expected value of future cash flows. Then you need to allow for discounting, which right now under IFRS 17 for most of the general insurance companies is not being used. So this is a new concept under IFRS 17 that your liabilities need to be projected, then discounted to the present value, allowing for time value of money, and then an explicit adjustment for the uncertainty on those cash flows need to be allowed for, which is the risk adjustment. So these three blocks, expected value of future cash flows, discounting, and risk adjustment together, these three blocks compute the liability for incurred claims. Now, liability for remaining coverage, which under IFRS 4 is the unearned premium reserve or the UPR, is also going to be estimated in a very similar way, where you calculate the expected value of future cash flows, your premium receipts, discount it to the present value, allow for risk adjustment, and there is a margin because your UPR has an embedded unearned profit So that now under IFRS 17 will be called the contractual service margin. So this is a general model, and standard also allows for, because the computation or the calculations underlying these liabilities are very, very complicated, and this might not be having a material impact for a company writing short-term contracts. So simplification is allowed for general insurance companies, and that is the premium allocation approach or the PA approach. So that is one simplification, and there is another variation to general measurement model or the BBA, which is the variable fee approach, which is primarily used by the life insurance companies writing unit-linked business. So in a nutshell, the building block approach is the way where you are going to measure the liabilities and using the blockwise calculations.
Thank you very much. I'll come back. I'll have some follow-up questions. So I'll go to Ashwani now. You heard both the gentlemen, and one is the regulator, come accountant, and one is pure actually. And they both talked about, I suppose, variety of challenges. You are, I guess, more on the receiving end because working for an insurance industry. How's your experience, if I may ask, in terms of, let's say, building block, in terms of VFA method, in terms of, I suppose, this eligibility testing for premium allocation approach? How's the journey so far? Is that the journey easy? And I also like, I guess, your answer, to be the word which you have used, the collaborative approach. So how, I guess, the salesmen, the underwriters, they are coming along with these relatively new approaches?
Yes, the journey, was it easy? No, not at all. Because first of all, I can see you smiling with a broad smile, Jazz. The thing is getting everyone along and to explain to the non-accountants that this accounting standard is going to change the way you do insurance. This itself is a big challenge, or has been a big challenge. On top of that, the management team, board, so everybody has to come on board and everybody has to be on the same page when an IFRS 17 transformation has to happen in the company. So getting everybody along to make them understand that, all along accountants have been taking care of the accounting standards. Why is it that suddenly we have to be involved in something which accounting standards are saying? So that itself has been a challenge. And then, of course, explaining the concepts, everybody has to be going through multiple awareness sessions, training sessions to understand whether it's a BBA approach or what approach has to be followed, identifying these things. So it has been quite a challenge. However, I would also say that in general, Oman market is a very price sensitive market. And we have, maybe we can say there is a saturation in the market considering the population of insurance takers, penetration in the insurance market. So from the market point of view, I would say the major challenge faced has been the tendency of companies to do undercutting and provide lower rates. So to the credit of IFRS, I would say that as we go along, as the companies stabilize using IFRS 17 as their approach, as they start looking really at the onerosity and these things, we can expect that this will reduce this tendency of undercutting, and it has to overall improve the financial health of the sector as such. So challenges have been there, and I expect them to continue for some time to come till everybody stabilizes and settles down. May it be the systems, may it be the people who are supposed to play a role in this, may it be the pricing of products, because now every time when an underwriter has to price his product, has to sell a policy, he has to think of, if I do this price, is it going to result into onerosity of this contract or onerosity of this particular group or cohort of policies? So this is a challenge. The journey was not easy, but I do believe that going forward, as we settle down into this, it's going to help the industry in the long run.
Very well said. Thank you very much. And you made my job easy. I was actually preparing the ground, a rather difficult ground for Kashif Bhai for the next question. And you has already hinted number of things, the onerosity, the market behavior, I suppose, as a cohesive force as well. So Kashif Bhai, my question is about, I'll break it down, I suppose, into two areas. How do you see the IFRS 17, the insurance industry reacted so far? And where do you see, I suppose, the future lies? And this question is more, about the insurance industry for Oman. not may not necessary as well as for the region as well. So share your thoughts, please. And you can possibly wear the cap as an accountant as well sometimes, may not necessarily the regulator.
Yeah, actually, we all are accountant actuaries. We are talking to each other. Nobody has taken to look the investors and the board. Are they aware of this? This is the biggest gap actually. Regulators are involved, accountants are involved, actuaries are involved. We are talking seminar, webinar, whatever. But the gap I feel now, the gap analysis, I think the biggest gap should be either the investors understand this IFRS 17, what's going to impact them actually. What's the biggest impact? Maybe their pricing go down. Maybe the profitability will not be there. Maybe the dividend payout will be affected. Maybe the credit rating of the company will be affected in the future. There's a lot of things. So what I feel, okay, whatever the IFRS 17 is, okay, the ultimate impact is going to be for the investor and the user of the financial statement. We talk about the numbers, but what numbers tells? It tells the story. Who understands the story actually? They are the investors. I think the challenge for the now onward for the regulator, for the accountant, and for the actuary now to explain them to the board, to the investor, how it impacts, how it's going to impact in their profitability. So I think this is the thing which I have got into this.
One question is, what do you feel? Because my own experience, Oman happens to write a lot of short-term insurance. So what do you think the IFRS 17, as far as my own experience is concerned in the region, IFRS 17 may not affect, I suppose, greatly when you write, the short-term insurance. What do you feel? Is that's the right interpretation of the results so far, that we may not find a difficult journey coming ahead?
See, what's a money market? A money market has, almost 88% is a general insurance, is a short term. Okay, so they will be using the simplest form rather than BBA model. They will use maybe PA model. Okay, and in that maybe the engineering class has some couple of 3 years policies also, but they have the option for the eligibility testing, and if the difference is not so big, they can again go to the PA model. Okay, so it means the major chunk is using the simplest form, and the other 12% is the life business. Even in the life business, most of the policies are group policies, which is for short term. Again, there is no so much complexity in the money market, as I feel. And I think from the industry point of view, Ashwini can rightly state their own thoughts. That really is this challenging for the company to either adopt for the PA or no. They have to adopt BBA model, or they have to, because in the GMM model, BB model, lots of data requirement is there, so as compared to the PA model. Because PA model more or less similar to the old-fashioned, system. Other than a couple of things, for example, that risk adjustment they have to make, and for the claim they have to adopt the same policies, but not for the remaining coverage. So I think the money market will not see that much difficulty, but the problem is they must not be relaxed. They must not. There are challenges even because a lot of things they have to do, and if they get relaxed.
And I suppose that's the regulator speaking, not the accountant. Because it's overlapping, I suppose. Yes, and people have heard the message. You are not going to, leave any stone, I suppose, unturned. Thank you very much, Kashif. Same thought, Ashwini. Are you with with the gentleman? Is that what you believe as well? That the insurance industry, of course, the 17 may not have a great impact because we tend to write a lot of short-term contracts. Is that yes from your perspective as well?
It's a yes and a no in the sense when we say impact in terms of financial impact, as we know that it's more of a timing difference. So even if there is an impact at the first reporting time, over a period it might balance out.
Yeah, the word I suppose you are trying to find is the smoothing. So smoothing will eventually happen.
Yes, exactly. However, impact in terms of preparing the teams to cater to IFRS 17, to think in terms of IFRS 17, to have actuarial inputs in pricing, underwriters and accountants on the same page. Earlier, an accountant, if an accountant asks underwriter about underwriting, the underwriter could say underwriting is my business, none of your business. And the underwriter could say the same thing to the accountant the other ways. But now it's no longer the case. So getting everybody on board in the new thing. So we have to unlearn some things, and people who have been in the industry for long to unlearn the way they have been thinking and to use a new method, especially when they are doing the pricing, when they are selling insurance itself, if they have to do the things differently, that journey is not going to be easy. And the other thing which Kashifji also mentioned, the data. So today, the data which is required to decide, and this transition especially. So when we are talking about the impact of this transition itself, the data that is required, what kind of data we have, whether we have it in the same shape and form as is required for the analysis, that itself is a big challenge. So it's a yes and a no to the question that you asked.
Very good. So I suppose you are also becoming a diplomat. You know, so no, yes, no, yes or no. We will try. I suppose if I'm able to change the answer. The gentleman actually seems to be neutral and he's smiling, I suppose, a lot more now. So Priyank, the question you heard are both these, you know, from the Oman perspective, and I suppose it's a bit of yes and no as well. Though the general insurance happens to be the leader, but the impact would be, you know, lethal also. I like, I suppose, a broader perspective because you work across the region, including Oman. How's your experience of the IFRS 17? And, you know, generally, how's the market other than Oman, whether it's a predominantly general insurance, medical insurance, and how has been the journey? And I like, I suppose, the two things actually which Kashifbhai has mentioned, and Ashwani has also mentioned, is the investor. So how is the impact, you know, so far on the investors across the region, and how is the pricing coming along, which is, I suppose, the concern of the Ashwani as well. So your experience, you know, with the answers specifically to these two thought process, investors and pricing.
So you see, in terms of investors, the objective of IFRS 17 was that the standard is going to bring comparability, consistency across other industries. And this question has been asked in the past also, like when investors used to look at the financial statements of the insurance companies, it was very difficult for them to understand what is the underlying profitability of the business. I mean, they have to struggle a lot. They need help from the experts. So one of the objective or one of the overarching objective of the standard was that investors should be able to understand the standard should provide, or the accounting after applying the standard should provide financial information which is more readily usable by the investors. I mean, honestly, if you ask me, this is yet to be seen because companies are not ready with their financial statements as of now. So only Saudi Arabia is a market where a couple of dry runs have gone through, and from regulatory push, the companies have involved their boards, they have involved their audit committees to be part of this journey and to understand what the results are looking like and to take action according to that. But still, I mean, there's a long way to go. And I believe that, I mean, it'll take some time to understand from an investor's perspective that how they are going to react to this change. From boards, yes, I mean, insurance companies boards when it comes to decision making and senior management. So one of the key things that we have personally felt is a lot of training is required. And this should be done at this stage so that the companies are able to take those decisions with respect to pricing, with respect to their business strategies, with respect to which products they want to grow into. So those kind of things will be required. Again, I mean, Saudi Arabia is ahead in the region in this aspect also, again, because of the regulatory push coming through, followed by UAE and Bahrain. So these regions have gone through the dry run. They know what the exact impacts are, like what Kashif also mentioned, that dry run is something that will give you the nitty-gritties of the implementation. I mean, just doing a financial impact analysis or theoretically assessing, saying that it's a short-term business, it will not have a material impact. I mean, theoretically, yes, but you never know. I mean, if the companies for example, where the losses right now are deferred to the future periods. But under IFRS 17, one of the concept is that if the business is loss making, you have to recognize the loss on day one, whereas the profit has to be deferred or it has to be earned as you provide the service. So using this concept also, and a lot of companies don't have underwriting profits also. So these kind of things, I mean, it's very specific to the company that, that what the impact is going to be on that. But yeah, I mean, for short-term business, the general concept is, or what we have seen is that the impact, financial impact particularly, is expected to be less compared to a life insurance company.
Thank you very much. And for the audiences, there is a term loss component. So I'm just parking it for a while, because it's a different Pandora box. I'll come back to you, Priyank, on that. Sure. Let's see how the time permits us, and I probably like, more specific comments on that. we discussed about the investors, and I suppose the IFRS 17 key fundamental principle is the comparability among the other manufacturing traders, or I suppose the other companies as well. On the same thought process, I'll probably start with I'm just going to change the pattern, actually, the way I'm asking the question, because I like to see a final exam, not I guess the graduation exam. So Ashwini, you get the question this time. The question is, we see there are fundamental changes happening in income statement and balance sheet. And of course, the key central player is the matching concept. That's what everybody says. So how's your experience so far? You've probably been seeing the income statement, balance sheet, how the liability for adequacy, claims are coming along, or various changes happening it. Do you feel these are going to be a good change? And what's, I suppose, the reaction of the industry? If you can safely say so.
Change, Shaz, as I mentioned sometime back, the change over a period, once a smoothing effect takes place, it would be a good change. Maybe for today's investors, there might be a hit if some reserves have to be made and things like that. There might be an impact on the dividend distribution capability in the intermediate. However, over a period, and for new investors who look at insurance companies where they want to invest, the balance sheets, the P&L would be more comparable, and that too across the world, because as all insurance companies adopt the same IFRS 17, there would be more comparable balance sheets across the world for the insurance sector. So for the new investors to come in, as I said, after the smoothing effect has taken place and once everything settles down, because there are a lot of assumptions to be made in IFRS 17. So initially, some companies might be aggressive, some companies might be more conservative, but over a period, things will come out. So on the long term, I feel the impact would be positive for the industry as such and for the investors. In the short term, however, we'll have to see how it goes. It might be different for different companies, specific existing investors, depending on the company's situation. Ashaz, you're on mute.
Sorry. Thank you very much. I can sense it's a very safe answer. Perhaps nobody, wants to target, I suppose, the dividends and, some of the words along the side as well. So thank you very much. The next session, I suppose, we'll have, more eye-opener. Now, Kashif bhai, the question for you on the same reporting pattern, as we see the 17 is bringing a lot of changes in income statement, balance sheet. How, as a regulator, you plan to change your regulatory returns? And I suppose the ministerial return, which has never changed. Last time, I suppose, before everybody was born in this session. So somewhere 1978, 79. So how is the plan, I suppose, to bring a line with the IFRS 17? I suppose this industry is keen to know.
Yeah, thank you, Shaz. Actually, you are only talking about the ministerial return, but I believe that while sitting in the regulator side, there are a lot of changes required with the regulator. Not only ministerial return, it's only one part, because it is bringing so much challenges to the regulator actually. Besides the insurance companies have other challenges, the regulator has other challenges actually, because around the table different game and this and across the table is different game actually. Yeah. So actually, what we've seen actually. Initially, the consultant like actuarial and accounting firm took the lead actually and started working hard with joint collaboration with the industry. Okay, and they learned by themselves actually, by practicing, by dialogues and by trainings. Initially, they were also lack of understanding before. Initially, when the IFRS 17 came, so there was a lot of misunderstanding and a lot of lack of understanding of the IFRS 17 at all the level. And similarly, it happens with the regulator as well. Okay, and we have to struggle hard. We have to get training. We have to get ready for the challenges and a lot of things which we have to change. For example, after having understood the IFRS 17 whole model, and regulator need to change. For example, not only the ministerial return, because you rightly said that it was developed in 1979. See, yes. How old the format we have been using till now in 22. Okay, about the regulatory returns. So this change actually not only for the requirement based on the environmental changes with the insurance businesses, we need to incorporate all that, and now over and above the IFRS 17 requirement. So I think the ministerial return will be totally changed. I think not because of IFRS 17, because now the insurance industry is altogether changed, risk is changed, environment is changed. and the regulations are going to be changed every year somehow by new regulations coming in. For example, the new RBC solvency requirement has comes in, Takaful law has been introduced.
Yes.
And the new technical now reserving criteria has been changed. In Numan, it has been only very simple criteria for the calculating the UPR since 1979. It was 5% of the net UPR, net premium. It is UPR only 45% without assessing the risk and everything. No pattern is used, no methodology is used. So 3 years back, I introduced 165 method at least to be used. And because at that time when I joined the CMA, the IFRS 17 has already come. So we are waiting to adopt the IFRS 17 fully. But not only the ministry written, actually, under the regulation, we have technical reserving laws and regulation. We have to change all for that. Even for the general, differently, for life differently, for medical differently, even for the reinsurance business, technical reserving may be different. Maybe the UPR calculation will be different. And for example, this year in the March 2022, after 1979, very first time, after having a very traditional model, now we have introduced the risk-based solvency calculation model also. But now, once we are going to implement the IFRS 17 by next year, so I think the newly issued RBC solvency model also need to have some fine tuning to align with the IFRS 17 requirements. Not holistically altogether, but there will be requirements, some fine tuning there.
So good things, I suppose, coming for the industry, so which are very healthy sign. The ministerial return, I suppose, they've been debated because they're very hard. Not only for the accounting team, the auditors, we also find it very, very hard to audit them. So happy days. Exactly. Yes, thank you very much. I suppose this should be a relief as well. Ashwani, a quick question for you. There are so many changes IFRS 17 has brought. How you manage to cope with them? What's the, I suppose, remedy? What's the secret? How you keeping yourself updated? And do you feel there should be an industry-wide IFRS 17 learning group in Oman? What's your take on that?
Yeah. Shah, as I say, ek se bale do, do se bale char. So strength is in numbers. Coming to IFRS 17, which is a challenge for each company in the industry. Companies coming together as knowledge groups, it can certainly be beneficial. So the thing which you mentioned about companies coming together as a knowledge base or something, that can definitely help. When you talk about at the company level, the challenge, I think the challenge has to be handled by setting the tone at the top right. So as even Kashifji mentioned, whether the board is aligned, whether the management is aligned. So once the tone at the top is aligned, once the board understands what this is and how this is going to change, and we have, as per our corporate governance, we need people with accounting expertise to be on the board and in the audit committees. So they have to then handhold rest of the board members to understand what is really happening and why is it that everybody needs to understand this change and tune in to what is going to happen post IFRS 17. So that's the way to go. Once the board is aligned, management is aligned, the teams are aligned. As I said, the underwriters, the claims management teams, the accountants within the team, actuaries, whether internal or external, the risk departments, the sales teams. Once everybody understands how this is going to function, it's only then that IFRS 17, the benefits of that will be seen by the industry. But to reach that place, that journey which is there, that is where the challenge is. And the tone at the top has to set it right, in my opinion.
Good. No, that's very well said. On the same thought, Priyank, you actually cover a larger, areas, because in UAE and in CSA, if I understand right, there are knowledge groups led by the regulator. Or in Bahrain as well, there is a committee has been set up as well. How's your experience? Are these groups are really good in terms of decision making, in terms of solving key challenges? Just share your input, please.
Yeah. No, absolutely. I mean, these groups are represented by some of the consultants and key people who are involved in IFRS 17 implementation. So definitely these groups help and they provide guidance to the companies. I mean, even when we talk about, let's say, SAMA, again, I'll refer to SAMA because that's a little ahead in the game. So they have formed those working groups and they have even sent out the working group recommendations to the industry on each of the key areas of the standard, where the companies might face challenges, and they have given some recommendations, and they have also asked companies' opinions. So this has been going on in Saudi Arabia and partially in UAE as well. So those working groups set the tone. I mean, some country-specific issues like industry pools and those kind of things are also discussed within these groups, and they provide direction on that. So my personal, opinion on this is that yes, it will definitely help. It provides a forum where you can raise your questions, you can get guidance on addressing some of those issues. And most of these working groups are represented by consultants, like I said, so they can bring in their experience from other regions as well.
Good, which I don't find as such group, in any group in Oman as well. I've been trying, though some informally, that there are, some WhatsApp group I have created where we exchange thought. But Kashif bhai, this is something as a regular, if you can possibly take it, please, this is something I request. All right, my question, we have, thank you very much so far, coming across so well, and you've been flying, with flying colors. Probably let's have one or two difficult questions also along the way. We discussed the role of the actuary. We discussed, I suppose, the accounting changing role as well. What I like to know from all of you, but one by one, of course, who else is going to be a key player? I'll just give you the hints as well. Is that IT is going to be the key player at all? And Kashif bhai, your thought process. We discussed about the data, but I like to know is that what has fundamentally changed compared to the IFRS 4 to IFRS 17 when it comes to system and data? And I would probably take a quick bite, from both of you as well, Ashwini and Priyank, on the same thought process as well.
Because this is an industry issue actually to gather the data. I think the industry participant can more elaborate how the data structure is available currently, which can fulfill the requirement of the IFRS 17, how much the bigger the gap it is. Okay, if they say the data sets already available, then okay, there will be no such gap. So their readiness is very much there. But what I feel as a regulator, whenever we ask the companies some very normal data, they take longer time to give the data to the regulator. So I believe there's a lot of gap for the data sets availability. So I think it will largely impact the companies because of the non-availability of the data. And for understanding now, there's not an issue. Consultant, auditor, accountant, regulator, understanding is there now. If the data is available, then the only thing is the system are ready to capture this data and to disseminate this data to the right forum. Means the input and output both are available with the data sets requirement. Then I think the game will be easier. Otherwise, it will be more difficult.
Okay, Ashwini, on the same thought process, how's been the journey so far in getting and extracting the data? Are you finding the process easy, tough? Is that what's the plan of the industry so far? To have some sort of managed services, or perhaps to have their own systems. What is the field of the industry? If you can share, please.
Yeah, so data, talking about data is available. I mean, data is there in the systems after all. You have, and even as per the other regulations, we are supposed to maintain all our data for the minimum period of 10 years, etc., etc. So data is available, but it may not be available in the same shape and form as may be required to do the necessary analysis for IFRS 17. Just to give a simple example, maybe the receivable data. If you have to have the loss ratio analysis, risk adjustment based on non-recoverability of premium, let's say, the receivable data may not be available policy-wise, the receivable data. So that's one example. Or it may not be available for, we always follow the line of business concept. Motor is maybe one line of business, PNC is one line of business. But if you have to segregate based on onerosity or based on possible onerosity or based on the pricing being different, if we have to segregate these lines of business into subsets, maybe motor comprehensive goes separate, motor third party goes separate, or whatever, just examples, then that is where the granular data may not be readily available, which means the IT teams and the underwriters and the accountants, they have to sit down together, break their heads, take the data from the systems, work on that data, ensure that the data is complete and making sense and it's matching with the previously reported financials, and then use that data provided to the consultants, the actuarial consultants and accounting consultants, to help them make a meaningful analysis out of that data. So yes, this is the reason why it has been a challenge. And on the system, so yes, going forward, we need to make changes in the system, because then now the data needs to be maintained at this different level of granularity, which was earlier not available. The different options available, of course, are to make a change to the existing system, its core insurance system, or to have a separate tool which integrates with your core insurance system, or to have a completely separate tool which helps you do the necessary calculations as part of managed services, as you mentioned. So these are the different approaches which I believe in, and if some other company is having any other approach that I'm not aware of, it's possible. But these are different approaches which I'm aware of, which different companies are taking up based on what is suitable for them. But it will entail a major change in the systems and the way the systems are being used.
Thank you very much. Priyank, I guess this has been, widely covered. What I like to know, your journey in the region, other than the Oman, what is the thought process? People are, buying the search engine or extraction engine more, or they are, implementing their core system, or I guess they are going for the managed services. Who is the major winner so far?
So Shaz, basically this also depends on, the internal resources that the company has. So companies who are going for managed services are those who are lacking internal resources to able to implement these requirements of the standard. But yeah, I mean, like both the panelists mentioned, that data is the king. So companies who have got better control of their data, they are ahead in this game, and they are their implementations are much ahead compared to companies who are struggling with data. And data was not just a challenge because of IFRS 17. Definitely, the data requirements have enhanced under IFRS 17. But even under IFRS 4, data has always been struggle. I mean, if you ask me, being an actuary, we always used to call for the data to do the quarterly valuations or annual valuations for insurance companies. And even then, the data reconciliations used to show differences between finance and different systems. So it has been a challenge. The only thing is that it has been aggravated under IFRS 17 because the data requirements have increased. There are different set of data that is being required. Actuals need to be required. Settlements data that was previously not required for IFRS 4 valuations now is required under IFRS 17. Companies are not used to record that data at the level of granularity that is required by the standard. So I would say more than availability of data, the level of detail at which the data is required is also a challenge. So yeah, and the companies who are able to do that, some companies maintain their receivables, payables, for example, at a level of detail that is required. So they are finding it a lot easier to provide data for the IFRS 17 implementation. Unlike some companies who used to pass a manual entry or a settle accounts on a policyholder basis or a reinsurer at a reinsurer level. So those companies are finding a bit difficult to get that data.
No, sounds good. Yes, so data, I suppose, is the king. So there's been no definite answers. And, the managed services is probably the solution, a temporary solution, as long as, I suppose, people are struggling it. No, thank you very much. And Umesh bhai, should we take the questions now? Because we have a very less time, left as far as the allocated time is concerned.
We got a couple of questions from Manish sir. I think one is answered by Kashif bhai. So you want to take the questions? Even I have posted a couple of questions in the panelist thing.
I suppose the question, Manish sir is asking his question on probably the credibility of the chartered accountant, going forward. Manish sir, this is more a sentimental question than I suppose anything to do with the IFRS 17. Yes, actuaries, seems to be having a last laugh so far on, the insurance industry, but 17 brings the accountant and the actuary at the same page and same front as well. And this is something, why we are having this session, and possibly a lot of debates has happened because chartered accountant also started understanding the insurance and perhaps the numbers, how they are behaving. So I don't find, chartered accountant could not be CEO, CFO of any insurance companies. And there is a very big reason that, actually might possibly leave. Unfortunately, Priyank, no offense to you, but, some of the positions to the chartered accountant. So this is a hypothetical question, and this is what I believe, I suppose, as a chartered accountant, where I like my fellows to be, heading. Unmesh, I see a lot of questions you have asked, and you have also been putting into the chat box as well. Quick response on the Takaful, Kashif bhai. You and me both are actually on the, the Takaful standard setting board as well. So quick, just, 1 or 2 minutes comment on the Takaful. How is the future of Takaful, parallel IFRS 17 standard?
Yes, see, based on the Islamic structure of the Takaful, we believe that the Takaful industry cannot adopt the IFRS truly 100% as it is. They need some amendments. there are some amendments required. So what we did actually in the with the AOP platform as a committee member, we are developing a standard aligned with IFRS 17 actually. So more or less it is IFRS 17 type of the standard, but aligned with the Sharia principles. So that if there is some issue, for example, IFRS 17 doesn't cater about the segregation of the fund. So, but we have to have a segregation from the participant point of view and shareholder point of view. And what kind of the expenses we can charge to the CSM, but not. It is not covering under by the IFRS 17, but the Takaful has to. For example, there are wakala fees, but the insurance company doesn't have any kind of the wakala fee. How to address this accounting issue, and for the purpose of CSM calculation, which expenses has to be taken care of, for example, wakala fee or either the admin expenses or commission. So there are so many issues. And for example, under the Sharia, because this is Takaful is the Islamic mode of insurance. So under Sharia, discounting factor is not allowed. And there are some repercussions that, okay, if those receivable and payables and which is already been, agreed on that amount, then whatever the period of the payment is, you cannot discount it. But if it is only a provision, it's only an estimation based liability or receivable, then you can discount it. So, but the IFRS 17 said whatever the period of the payable and receivable is, you can discount with the discounting factor. So there are a lot of change, and we have to address all these issues in the Takaful. That's why we have already developed, and there are two standards actually. One is for the recognition and management, and second is the presentation and disclosure. So the presentation and disclosure, and one standard is already approved by the board of the AOP, and standard will be presented in the board within this month, hopefully, and it will be approved, and inshallah, and it will be issued. So time is very short because the Takaful industry cannot, adopt the same standard by January 1st, 23. Because they also need some transition time. So we are suggesting that, okay, they might have the more extended deferment period for 1 or 2 years, maybe. Maybe they will start from 24 or 25. So till that time, they might be reporting in a different format, in the old format, and the insurance sector will be reporting in the new format. There will be less compatibility with the insurance, commercial and the Takaful, but by time it will be resolved. But early adoption is advisable. See, early adoption, any company are ready to set with the data set and calculations, and they can adopt early, no issue. But as a regulator, we cannot push because this is the company's own prerogative to decide based on their own readiness and preparations. Are they prepared or not?
All right. No, thank you very much. And because I'm also part of the same forum, with Kashif Bhai, we have done a hell of the job, and coming up the standard on the Takaful is really, really very challenging. Our drafts are there as well. The public hearing happens. Anybody's interested, they can get in touch with me or Kashif Bhai, and we can invite you to the public hearing also, should you have an interest on the Takaful as well. See, some of the questions on which you have raised, about the, and somebody has probably written it down about the IFRS 9 as well. And I'm not sure that, the panelist can possibly answer it. I'll answer these questions because I work on IFRS 9 very heavily for insurance industry. IFRS 9 is, as far as this concerned, you have a deferment, as far as the insurance company is concerned, if you have not adopted the IFRS 17. So which would mean is both these standards would be adopted on the same day. As far as Oman is concerned, nothing much is happening on IFRS 9. I've only been involved, I suppose, in 1 or 2 jobs. And in the rest of the region also, there is not much happening on IFRS 9 because people are still behind on IFRS 17 as well. And the other questions is asked about the ECL, the provisioning, and I suppose the policy holder. So there is nothing much going to change when it comes to IFRS 9 for insurance companies because the expected credit loss, the methodology of recoverability, these are all still governed by the IFRS 9. 17 has nothing to do with it. People have a misconception that 17 would come into picture by any means, not at all. 17 will only decide, recognize and measure your insurance asset. Once the asset is there for provisioning, they will fall into the IFRS 9 as any normal asset would fall. So, but this is, believe me, I've been doing this exercise on a number of projects, very, very difficult. Finding the data itself is a challenge, finding the pattern itself is a challenge, but it's still early days because 17, people have not yet fully adopted. 9, I suppose, is, difficult as well. And one more question, I suppose this is something I leave this luxury of Kashif Bhai. I suppose when the real implementation, in terms of IFRS 17 and IFRS 9 for insurance company would come into picture. Kashif Bhai, just a quick comment. Maybe this is an area I understand you may be working. So as much as you are comfortable, I suppose, just a very quick comment, please.
what I understand from the IFRS point of view, we have earlier debate on this on the first the publication of the financial statement based on the IFRS 17 on standard. For example, in the March, the first reporting after 23 January will be the March. But is it the annual period or not? So
Yes.
as per the plain reading of the standard, it says the first annual reporting period after Jan 23 will be the first published financial statement as per IFRS 17. So might be in Oman, it will be December 23, the first reporting. But you rightly said in the previous chatting that discussion that if the company has been reporting for the March, June, and September in the old format, how they will consolidate the numbers by December? So they're also challenging. So I think we need to understand first of this phenomena and not only regulator, accountant, auditor, industry.
Yes,
Everybody.
industry, I suppose. Yes, you're right. There has to be proper, debate and proper, I suppose, discussion with all the stakeholders.
Yeah. So if the first reporting timeline is the March, I would say it will be very challenging for the industry to comply with all that. But if it would be December, I think 100% all the industry members will be able to comply all that. 100%.
Priyank, yeah, I understand, Kashif bhai. Thank you very much. Priyank, quick comment from your side, please. How is UAE? How is Saudi?
So both UAE and Saudi, sorry, go ahead.
Yeah, 1st April 2023. Are you likely to get any IFRS 17 enabled number?
Yeah, so the requirement is 1st April 23rd, definitely. So first reporting will be 31st March 2023, which will be based on IFRS 17. So both Saudi Arabia and UAE have made it very clear that, it has to be first quarter only, not the first annual period. So that is their stance on that. And secondly, a lot of these companies are, listed on the stock market. So even for the reporting purpose, if they have to publish their financials, which has to be audited, I think external auditors also have a role here, whether they'll be able to sign off something on a quarterly basis, which is on IFRS 4 basis. So I personally feel that it has to be the first quarter.
Yes.
At least in the other
markets. This is my view as well, because as an auditor, I will not sign, because that would be the non-compliance of the IFRS. IFRS, would apply at any period after, 1st January 23 as well. So these are, still early days. UAE and Saudi, they come up with their own interpretation by the regulator as well. I suppose the word is, looking at you, Kashif bhai. So now, we will look forward, I suppose, to hear.
Mr. Shah, if you allow me.
Yes,
for example, in Oman, the quarterly reporting is not to be audited or reviewed by the auditors here in Oman. So they only need.
Yes, not required anymore.
Not compulsory.
Yeah, not required anymore. It used to be a few years back, but I guess that has been taken away now. So no need at all. Yes, this is. So yes, that's why, Kashif bhai, this is something, you take your sweet time and then come back, for the clarification, because what we really need, I suppose the regulator should lead us, on this thought process. Thank you very much. And Unmesh, is there any question left? I believe we are done with the time as well.
I have just maybe an eye opener for everybody. Those who have got those insurance companies who have got parent companies outside Oman, and if IFRS 17 is not implemented by the parent company, then what's going to be the challenge for the insurance companies, because they have to maintain data into IFRS 4 as well as IFRS 17, like Q1 2023. Probably say like India would be March year ends, so they would need the information under the current gap, and the company would be preparing the accounts in the IFRS 17, because it's a local requirement. So the dual reporting. Fortunately, we don't have review requirements from the auditor, otherwise it would have been another chaos in terms of having two separate accounting and reporting.
Yes, your question has merit. I have actually worked with a client LIC, the entire region. I've implemented the IFRS 17 for them. Way back in India, they still follow the old system of accounting. Here, they'll be converted into IFRS 17. And yes, this is going to be challenged. They need to keep the two sets of accounts. There is no remedy, unfortunately, because India will never leave you behind. By 31st March, you have to file the accounts there, and they have their own way. If I understand right, Schedule 6, if I remember right, my days, insurance has their own, laws there as well. And it could be the other way around in Mesh also, like, 17 number we are making, and the group is on non-IFRS. Just think about a European subsidiary, which is going to be an IFRS 17, and if they are working somewhere in Africa, which might not be in the IFRS 17. So those number IFRS 4 will be converted. I have also working on the same client.
And they
I'll
got
never say
carve-outs
no.
also. European Union has got some carve-outs, right? And then they have to be
So
aligned.
yes, the life is, these are the challenges, and really depend upon when the case comes into, I suppose, in our hand as well. But yes, good thought process. This is very much likely to happen.
Yeah, in terms of IFRS 9, I just wanted the regulators' views that there is an option given to the insurance companies in terms of how they want to go for IFRS 9 adoption. Though IFRS 9 says it has to be done retrospectively. Now, if the option is given, then probably some companies may exercise it, some may not, depending on probably the group's policies or maybe the benefit available to them in terms of adjusting some losses in the opening equity and then brushing it everything under the carpet so that they start with a clean slate in future. But would it not create any inconsistency for the year? So are you looking at having any guideline in terms of ensuring there is consistency in adoption? Because that's the option given by the standard setter. So we don't want to have any multiple ways in which these standards are implemented in the country.
As a regulator, we have not issued any guideline over the adoption of the IFRS 9 along with IFRS 17. But we have announced that if the IFRS 17 is allowing to adopt the IFRS 9 along with it, once you are going to adopt the IFRS 17, we are happy with that. We are not going to anybody. But if it is more welcome, see, both the standards says early adoption is already welcome. For example, one of the in Oman has already adopted IFRS 9 without IFRS 17 even. So it's an open market based on the standard. We are not going to regulate by our own. We open to the standard.
Okay.
Yes, Unmesh, this is it. I have not seen many people, coming across in insurance industries, they want to adopt IFRS 9. Rather, they are taking the advantage of deferral it, because IFRS 9 is also going to hit them hard, compared to the IFRS 17 as well, because the policyholders' dues, Oman has a very bad tendency not to claim it, I suppose, in 360 days, 180 days, 200 days. So those things are under the carpet, but those days are coming, I guess, under the scrutiny as well.
Correct.
Thank you very much, Unmesh. Is there any other question left? I guess.
Also, in this issue, Mr. Shah, for Takaful industry, the FAS 30 was issued just in alignment with FAS 9. AOFI has also announced that once they issue the standard aligned with the IFRS 17 base, so then they were allowed to adopt FAS 30 even.
Yes. Yes, same thing. FAS 30 is also there as the same thought process.
Yeah. For the members, if you want to ask a question, you can raise a hand in this Zoom. You can click on the raise hand button, so we can allow you to talk. Anybody from the members? Okay, questions posted also here. Okay, then shall we proceed? Maybe panelists would want to share any other aspect which has not been touched upon during this discourse.
Umesh, yes, no problem. Yeah, this is something because one area, which I tried avoiding it, loss component. So this is one area, I guess we should hear the views also, because we heard about a concept called the honorcity a lot of time. And what are the honorcity means is any contract which is a loss-making contract at the day one when you write it for a layman, honorcity. And that creates a loss component. So first, I suppose we'll hear from Ashwini, your own perspective, Ashwini. When you've been adopting the IFRS 17, are you coming across the loss component? Are you coming across some contracts which are enormous? And how's the reaction so far?
Right. So Shaz, as an insurance industry, logically, nobody would sell a policy at a loss, right? But then there can be business situations where, because it's a group, because it's a multiple lines of business, different covers being offered, or for various reasons. So there could be a set of policies which could fall under that onerosity purview. Also, so And in the past, so yes, there is a one-off concept where you can remove the one-off events to determine the long-term loss ratios to determine the onerosity. But then there have been cases where, though you might have priced it at a particular product or a policy, you might have priced it at a particular rate. At the end of the day, because of the estimation gone wrong or for various reasons, you might have landed up into having loss ratios which are higher than 100%. Plus, there is a concept of expense allocation and risk adjustment, which is also coming up in the IFRS 17 calculations, which is also resulting into onerosity. So the traditional way of thinking of just looking at pure premium and claims gets changed when you have to look at this adjusted loss ratio or the combined loss ratio, where you have to include these expense allocation and other things. So that is going to change the way of thinking in terms of onerosity concept. And the pricing will have to be readjusted to ensure that certain contracts don't fall under the onerosity purview.
I guess you have actually explained quite well. So which seems the onerosity concept, is in good hand as far as the insurance industry is concerned. So Priyank, loss component, she touched based on the loss component, from the accounting perspective, and I suppose the day one loss. I like to hear your views about the loss component amortization. Just talk us through, once we have the loss component, an onerous contract we identified on day one, how this loss component, the amortization works. This is something reader, or the participant should appreciate.
Just, continue from what Ashwini mentioned, because, loss component, you're right that most of the companies will not write a business knowing that it is loss making at initial recognition. But based on facts and circumstances, let's say at a subsequent measurement, you write a 1-year contract, you are 1 quarter into the contract, based on facts and circumstances, you see that the contract has become loss making, where the loss ratio or the loss ratio plus expense plus commission ratio, which is the combined ratio, exceeds 100%. At that point in time, you have to establish a loss component. So once that loss component is established, then you move on to the next valuation period. You see how your facts and circumstances have changed for that particular group or contract. And then on that basis, you either increase your loss component or reverse it to the extent that you have established it. So for example, if the loss ratio or the combined ratio is 110%, you establish the extra 10% as a loss component. Then in the second quarter, you see that, okay, it has moved below 100%. Then you can reverse that loss component to the extent that it was established. It cannot go negative in that case. So that's the whole idea. As you provide service, you can reassess the estimate of loss component.
Thank you very much. Kashif bhai, just last comment. Loss component, because in Oman we have observed, and this is not something we have debated, that majority of the contract happen to be the short term as well. What's your thought process? Are we likely to get a big loss component adjustment in Oman in the first year of implementation of IFRS 17 or no?
The onerous contract concept was also available in the IFRS 4 in terms of PDR. Let's say, for example, PDR was the premium deficiency reserve, which is almost, not exactly, but almost near to that concept actually. For example, if you are making losses in one of the class of the business, then and these losses to be recorded upfront as a provision named PDR. Okay, and you can reverse in the future if it becomes profitable. I think not only, yes, you are right that in Oman, most of the business is short term, and particularly this time, the motor business and medical business, having the higher loss ratio, combined ratio, and industry little bit bleeding. So I think two segments may be impacting a lot for the honesty.
Ashwini is smiling, you press the right button. I guess the industry, the motor and medical.
There is one more aspect actually for this loss component. For example, for short-term business, you use the PA model or whatever. Okay, you recorded upfront all the losses as onerous contracts. Okay, but these are the underlying contracts. What about the reinsurance held? There might be a gain in there. Okay, there might be a profit there because of the lot of recoveries from the reinsurance side. If you are having the reinsurance policies held, okay, then it means not the issued. I'm talking about the held policies. So it means there may be a gain. So, and if the gain has to, for example, the company has a reinsurance arrangement like proportional treaty, and now it has to be attached with the attaching policies. Maybe for 2 years they have to record it the profitability. They have to spread for 2 years, maybe for 3 years, based on the attaching policies principle. But under the IFRS, after amendment, it is allowed that the reinsurance held policies can also have adjustment with the loss component, so that not necessarily you have to record all the expenses in the insurance contract and all the the profit.
Yeah. This is the risk attached basis. What we mean, I suppose. Yes.
Yeah. So it means that those income which you have recognized in the period, not necessarily you can record in the upfront also, based on the underlying contract if they are on risk. So there are ratios to be calculated for this. This is called
So this is not easy exercise. Even though you may have a short-term contract majority, but there are chances that you still may have a loss component, and the accounting element is not that easy.
Yes.
And I suppose that's the the census from the Ashwini and Priyank as well. So we pray we should not come across, I suppose, on the loss component side. Unmesh bhai, there are one or two questions have come up. I suppose before we call in, let's see the question. One question, when I read it about the the UAE perspective, I don't know, this is hypothetical question for me. UAE, as Priyank has said, in my own experience, has been far ahead in terms of IFRS 17 into comes into contention. And there are a lot of dry runs, and a lot of submissions has been made. And if somebody has to make an IFRS 17 implementation in the region, it has to be either KSA or the UAE in the front. So they are far ahead. Second question is being asked by Suleiman, which talks about the impact of the retained earning on the IFRS 4 and 17. This is to Mr. Kashif as well. So Kashif, the question is about, do you think that the adjustments when we adopt the IFRS 17, are they likely to be a material financial adjustment to the accounts or not?
Yeah, I think so. The amount will be material, but but it will be, as Ashwin told, that this is a time issue. By time it will be ultimately it will become zero. The differences altogether will be zero. In the first year, in the initial period, maybe there are some negative figures, but ultimately it will end up with the zero differences. So it's only timing difference. So yes, because based on the requirement, based on the industry ratios, I think the first year will be negative as per the numbers which is given by the consultant and the companies to the regulator. But it's not that much. But yes, in the short term, mostly two major business, which is medical and the motor, they are making losses.
And I suppose to add to the the wound as well, IFRS 9 would also bring a little bit of negative adjustment as well. Those who have a significant financial investments also. So that's it. Thank you very much.
And just a word of caution along with this question, word of caution probably to the industry also, when they look at the dividend declaration for year end December 2022, they better have the full impact assessment. Otherwise, we don't want to land up in trouble where the standard triggers any negative profitability or any equity challenge.
I think the biggest
challenge. I suppose I opened the Pandora's box when I mentioned
No,
that.
yes, that's what only she is the one who is going to suffer, or probably the segment she covers. So the industry people, because as a regulator and I suppose as a consultant, we are not that much affected, but the investors, of course, is largely going to be affected. And this is going to be tricky not to distribute the dividend in the first year itself. We can't say openly, but that should be the message, I suppose, after the session as well.
I think biggest challenge for the accountants later on to convince the board for their performance appraisals.
The performance, yes. Thank God you said accountant, not the auditor, so which is my job is safe. Which is safe, Yes, this is not an easy journey, friends. I have been through this route, I've explained it with a lot of board and a lot of trainings I've conducted. It's a difficult pill to swallow. And with this session, I hope a lot of people would start understanding the merits of IFRS 17. This is not going to be a piece of cake. We really have to put our, thought process, I suppose. So thank you very much, Unmesh bhai. Thank you very much, ICAI. I suppose we have a good session, and you can take it forward, please.
Yeah, so thank you all the panelists and the moderator. Now I request our chairman to felicitate the panelists and the moderator. So Sajivji, please do the honors. So
thank you, Priyank Gupta ji for joining us and having a part of a wonderful session today evening on IFRS something practical challenges in implementation. And please accept token of appreciation certificate, e-certificate. Thank you.
Thank you.
Sajeev ji, request you to felicitate Kashif bhai as well.
CA Kashif ji, thank you so much for joining us. It's a great honor and privilege for us to be with us. You be with us today, and please accept our token of appreciation as a e-certificate. Thank you so much.
It's my pleasure actually for inviting me. Thank you very much, all of you.
CA Sajeev, I request you to felicitate Ashwini ji as well.
Ashwini ji, anyway, part of Muscat chapter, so so it's kind of we don't feel that as a panelist, but still it's a formality. Please accept our appreciation token of appreciation as a e-certificate. Thank you, Ashwini, for joining and for your all support to the chapter.
Thank you very much. Thank you for having me for this session.
Thank you.
And last one, CA Sajeev, I request to felicitate our moderator, CA Shaz as well.
Shashbhai is always a part of ICAI. I think this year 21, 22, 22, 23 is like a AMC. Like every quarter we will have one visit. Thank you so much, Shashbhai, being part of us for our sessions.
Thank you very much, Sajeev bhai.
Please accept our appreciation.
No, thank you very much. I guess you've been doing a very good job. So thank you very much. Thank you.
Thank you all the panelists and the moderator. Now I request CA Jim to give a formal vote of thanks. CA Jim.
It was a very active and interesting discussion. I think almost all the people stayed with us for the long entire session. Thank you very much to all. In fact, I felt like we should have an investor also in the panel, but I think altogether we have taken care of their interest also. All the panelists added value to the session. Kashif Siddiqui, representing the regulator, Ashwini ji from the corporate side, Priyank Gupta ji, actuarial side. Thank you very much to all. And of course, our star moderator, Shanwas Khan. Thanks for the time you spared for this event. Thank you very much. Thanks to Unmesh for comparing this event, CPE team for arranging all these things. Thanks to CBFS, our sponsor, corporate members and corporate supporters, and all the members for joining today. Thank you very much and good evening.
Thank you. Good night.
Thank you very much.
Just for the members, so we are having events in pipeline. So 16th October, there's a leadership event coinciding with the Omani Women's Day. So do register and attend. It's a physical event. Then you would be happy to see the messages in the WhatsApp group for the Diwali celebrations, which are planned on 21st October. We also expect nominations, entries from the members to represent the states. So as of now, we have got very less entries. So we encourage all the members to register to represent their states and be a part of the display of the unity in the diversity, which is the theme for the celebration. And then we have got a very interesting session on 29th October. It's a physical session. Those members who also want to acquire ICAEW membership, we are going to have speakers from the ICAEW flying from UK to Muscat and explaining what are the different ways and then what are the how to acquire the ICAEW membership. So looking forward to see you again on 16th October. Any feedback, you can scan the QR code and share your feedbacks, inputs. So that gives us a chance to improvise and then try to get best for you in the upcoming CP sessions. Thank you, everybody. That's all from my side. So shall we stop the recording?
Good night. Yeah.
I'll stop the
Good
recording.
night, everyone. Thank you.
Thank you. Thank you so